Good morning. I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Alix here with The Street, and together we bring you Morning Call Express. Scott, let's get to it. Markets had a crazy day on Monday, S&P closing up almost 3%. That was almost the best Monday after Thanksgiving since 1941. Very close here. That rally, was that constructive? Was that a good thing for you as a trader?
As a trader, it was very frustrating because you were up about 300 Dow points on the open, and then it just stuck there all day. Stayed there all day long. So once traders got a little comfortable in their longs, around, I would say, 245, the market pulled in, that sneaky pull into only up by 220, and then in the last 15 minutes of the day closed okay. So you really had to test your patience. And then as far as today, what's a little bit better to see is that at least you're getting a day two, that some traders that weren't long going into Monday, that positioned on that dip yesterday, now could at least take some profits if they want to, or they could stay with the trade.
So on day two of a rally then, does that give you more confidence in a longer term uptrend, or is there some heavy resistance we have to watch out for?
I think as I look through all the charts, I see so much resistance in store for this market and in different sectors, it's hard to get so overly excited. I think for a trade, yes, it was good. Buy yesterday, sell a little bit today, and then see if we could hold higher. So what I'll do is I'll show you the chart of the S&P, and then we'll get into other charts, and you'll see exactly what I'm talking about. So if you look at the chart of the spider right here, I'll show you the spiders because that's what we've been trading. So that we closed on the dead lows Friday. Yes, we held this downtrend that we broke above back in October, so that was somewhat constructive. It was also the 61.2% retracement, which really doesn't mean a lot. So yesterday we held right in front of resistance 1. We drew this yesterday, and now we're opening into this gap. Okay, so if they could fill this gap, it'll negate the control of this bearish gap. But overall, I still don't think it's that compelling. I'm probably going to sell my longs that I positioned in yesterday into this trade, and I think some might even test a short at the 50-day moving average around 120.71 up to about 121.58, which fills that gap.
Well, that's exactly what I said yesterday when we were deciding about the show, and I said, all right, so what are you going to short after yesterday's rally? So in particular, though, I want to check out on retail because we were looking at that sector to see, after all the positive news about Black Friday and Cyber Monday, can retail hold its gains? Let's look at the RTH and see if it did.
Okay, well, overall, I think they held their gains. It wasn't powerful. There wasn't that much excitement. Some things did better than others, but overall, if you look here at the RTH, you will see that it's still, holding above the moving average. It actually reclaimed its 50-day, which is pretty important, but it didn't close on the highs of the day. Look at this resistance just staring in front of it, and then you actually have even a bigger resistance around 111. So at this point, it's going to take a lot of work to start getting through this. If right now you could trade it versus yesterday's gap of 108. So if it holds 108, it's sort of strong. But overall, I think you just have to stay with what you have already.
And what about the bright spots in retail? Were there some stocks that outperformed the RTH and are looking really good?
You know what? Nike. Nike looked good. I looked at the chart yesterday. I was like, wow, this is pretty impressive. I actually even think it's on the IBD Big Cap 20. So if you look here, you'll see this is a nice day. This is some excitement. It broke through an area. You saw some momentum. It closed green. And now this is a stone throw away from these old highs. So if you're an investor in Nike, you should be rewarded. As a trader looking for something that could move, if you look at this macro chart, Nike looks like it's ready, to make new move highs. It's also above the moving averages. So this is investment quality.
So as a trader, though, and a long-term investor, have you missed the Nike move for now?
I don't think so.
Okay.
I think as a trader, maybe you got in yesterday, seeing the relative strength. If we're gapping up today, you sell some. But as an investor, stay the course with Nike. It looks technically good.
And I want to go to another stock. Tiffany's reported earnings before the bell. Big beat for the third quarter. The Q4 guidance was relatively light, and 2012 guidance was relatively in line. What's the stock doing pre-market, and is this a place you want to be looking at today for some retail juice?
I think it's down 3-4%, so I guess they didn't like the guidance. And when a stock is a high-end retailer priced for perfection, it can get hurt. So you want to see if it's priced in for today, or if it opens lower and gaps and continues lower. So today with Tiffany's, if you look here, you'll see that it hasn't been acting great, but it's been kind of lukewarm, holding above some moving averages. Yesterday closed in the middle of the range. So I believe it's opening around 70. I think that you have to trade it against the 69.11. If it starts breaking below this area that's held, you're going to see some pressure here. So just be aware if you're an investor in Tiffany, because the consumer is not doing as well as everyone thinks. And if you're going to conserve money, where do you conserve it? A little bit on the higher end.
Right, but Tiffany's does have really good pricing power because it raised all its prices when input costs were so high, and then hasn't lowered them now that input costs have gone down. So there might be some operating leverage there. So then wrapping it up, though, real quick, want to go to Amazon and Apple. Tech, kind of retail, kind of tech, kind of retail. How did they hold up yesterday? They both had some big moves.
They were decent because I came in flat and I waited for the first pull-in both of those, and I was able to actually buy them in the first 30-minute low and then add through the high, and they closed pretty strong. So if you look here on Apple, you'll see that there's room for a trade. It held the 200-day. It held the long-term trend line, and now it's coming into another inflection around 376. I would add to this above 376, but 383 is going to be a huge, huge resistance area. And lastly, Amazon, also broken stock at this resistance zone. I think that it can get to about 199 to 201, but I'd be a seller there versus a buyer.
All right, thanks, Scott. I appreciate it. So we're going to go into more retail, more high beta tech, and of course, gold, my favorite topic, on the entire morning call on the street. So check it out.